Caroline's Online Academy. We are in the process of solving previous year question and sample question paper questions from the chapter Dissolution of Partnership Firms, and we are in the series of videos in which we are solving journal entry based problems. Today I have a question from sample question paper 2023 and 2024 here. Let's go ahead and solve it. Sun and Kiran are partner sharing profits and losses equally. They decided to dissolve their firm. Assets and liabilities have been transferred to realization account. Pass necessary journal entries for the following. Point number one. All partners are agreed that the process of realization at the time of dissolution will be accomplished by Sun, for which he will be paid rupees 10,000 along with the amount of expense which amounted to 2% of the total value realized from assets on dissolution. Some assets were sold for cash at a cumulative value of 12 lakh and remaining were taken over by creditors at a valuation of 3 lakh. Now, what are they trying to teach you through this, my dear children? They are trying to teach you through this. What they are trying to teach you through this is when they say the commission is a certain percentage on the assets realized in cash, then you're supposed to take only the 12 lakh part. But when they say the commission is a certain percentage on the total value of the assets realized, you're supposed to take the 12 lakh and the assets taken over by creditors, because that is also asset realized only. So the total amount of asset realized is 15 lakh. That is what they are trying to teach you, my dear children. Understood or not? They are trying to teach you that the total value of assets taken over is 15 lakh. Assets realized is 15 lakhs. Understood or not, my dear children? If they're, why? Understood or not, my dear children? If they said the total value of the asset, the commission is a certain percentage on the total value of the asset, realized in cash, we'll only take 12 lakh for computing the commission. But they've told the total value of the commission is a percentage of the total value of the assets realized, which means the 12 lakh realized in cash and the 3 lakh taken over by creditors. That all asset was also realized. It has helped us settle some liabilities. So we have to consider that also. So 15 lakh into 2% will be 30,000. You're already paying him 10,000 as a remuneration. Both the commission and the remuneration are expenses, and all expenses during realization, all expenses will be debited nominal account, and during resolution, the only nominal account that is available is realization account, and therefore realization account will be debited. When we are paying the partner, we won't actually pay them. We'll just increase the liability in their capital account and then pay them later on. So Sun's capital account will be credited. So the journal entry is realization account debit to Sun's capital account. Realization expenses and commission. Understood or not, my dear children? You understand? And that will be 40,000. That is 2% of 15 lakh and 10,000 as remuneration. So the thing is, you're not supposed to get scared when you see such a big paragraph. This is something that you usually don't see in realization problems. You're not supposed to get scared immediately. You just have to read it properly, understand it, and then pass the journal entry. Understood or not, my dear children? Deferred revenue expenditure account appeared in the book set 28,000. Now, what is deferred revenue expenditure, my dear children? Deferred revenue expenditure, advertisement suspense expenditure, P&L debit balance, what else? P&L debit balance, miscellaneous expenditure, all of them are accumulated losses. What is the journal entry for accumulated losses, my dear children? It is partners capital account debit to the accumulated losses account. And here the partners are who all? Sun and Kiran. The Sun and Sun's capital account debit Kiran's capital account debit to deferred revenue expenditure account. And that was how much, my dear children? 28,000. This will be distributed in their whole profit sharing ratio. So that is 14,000 and 14,000. With that, we have settled the second transaction. Third one is what, my dear children? Out of the stock of 1,20,000, Kiran, a partner, took over 1/3 of the stock at a discount of 25%. 50% of the remaining stock was taken over by creditor of 30,000 in full settlement of his claim, and balance of the stock realized 25,000. Now, again, a big paragraph. All you have to do is stay calm and not panic. Understood or not, my dear children? So, 1,20,000 was the total stock, and what happens here? 1/3 of the stock, which is 40,000, 1/3 of 1,20,000 was taken over by Kiran. 50% of the remaining stock. So after 1/3 goes, you only have 2/3. Am I right or not? So after in the 1,20,000, 40,000, 1/3 has gone to the partner. So remaining 2/3 is 80,000. Out of this 80,000, 50% is taken over by creditor of 30,000 in full settlement, and balance amount of stock, which will be the remaining 50% of the 2/3, which is 40,000, is realized at 25,000. So this 40,000 was taken over by Kiran at a discount of 25%. 25% on 40,000 is what, my dear children? 10,000. So 30,000. Some people make the mistake of applying the 25% on 1,20,000. No, not on the total value. On what he has taken, he's getting a discount of 25%. So 40,000 into 25%, 10,000 will give you 30,000. Taken over by Kiran. This 40,000 was taken over by creditor in full settlement. So no entry for this. This 40,000 was sold for rupees 25,000. So this was sold in the bank. Understood or not, my dear children? This is why I like, sample question, paper question. It teaches you the concept. When the stock is taken over by creditors, what is the journal entry, my dear children? Kiran's capital account debit. Stock is taken over by partner. Kiran's capital account debit. And when the stock is sold, bank account will be debited to realization account. When the creditor takes over the stock in full settlement, no journal entry will be passed, and therefore that is not included here. To realization account, Kiran took over the stock at 30,000 rupees, and bank we sold the stock for 25,000, remaining stock for 25,000, and the total 55,000 will be credited to realization account, as that is the asset realized. Understood or not, my dear children? No. That is asset. In that we credit that to the realization account. Asset realized is actually more than just 55,000, because creditors also have taken over stock, but we don't pass journal entry for that. Understood? And D, an outstanding bill for repairs and renewal of rupees 3,000 was settled through an unrecorded asset, which was valued at 10,000, balance being settled at cash. So there was an outstanding bill for repairs for 3,000 rupees. We gave an asset to settle it. Did we give the asset in full settlement? No. We took cash for the remaining amount. Understood? For a 3,000 rupee liability, we gave a 10,000 rupee asset and asked them to pay the remaining 7,000. So we did not give it for free. I mean, we did not give the asset up for full settlement. 3,000 rupees credit ask, we gave 10,000 rupees asset, not in full settlement. We told them 3,000 you write off, remaining 7,000 you pay in cash. So whenever we receive money on assets, the journal entry is what? Bank account debit to realization account. So bank account debit to realization account, and that will be 7,000, my dear children. Now you might be wondering, like, sir, we gave up an asset for 10,000. Why are you passing this journal entry just for 7,000? This is correct and all. I checked the answers, it is correct. And the reason is very simple, my dear children. Out of the 10,000, you divide the 10,000 into 2, my dear children. Divide it into 2. Divide it now. 3,000 was given up for the outstanding bill for repairs in full settlement. For the remaining 7,000, we received cash. We do not give the 10,000 in full settlement. Understood or not, my dear children? If they had they told that 3,000 rupees liability was given up in full settlement, an asset was given up in full settlement to settle the 3,000 rupee liability, that's a different story. Here, that didn't happen. Am I right or not, my dear children? So that's it. With that, we've come to the end of this video, my dear children, and I will meet you with another video from another previous year question or a sample paper question. You people take care, have fun, and bye.